A decade ago, Dubai's skyline looked like a giant construction site. Tower cranes filled the horizon, new skyscrapers appeared almost monthly, and developers competed to build bigger, taller, and more luxurious projects. The city became famous for its relentless growth. But today, something has changed. In many parts of Dubai, the cranes are gone. Construction activity hasn't disappeared entirely, but the pace is noticeably slower than during the city's boom years. For a place once known as the world's most ambitious building experiment, the silence is surprising. Some people assume the slowdown means trouble. Others believe Dubai has simply run out of space. Neither explanation tells the full story. The real reason is much more interesting. Dubai spent decades transforming itself from a regional trading center into a global city. It built airports, highways, financial districts, luxury communities, tourist attractions, and some of the world's most recognizable skyscrapers. Much of that vision has now been completed. Instead of racing to build everything at once, Dubai is entering a new phase. The city is shifting from rapid expansion to long-term management and refinement. Fewer cranes do not necessarily mean less growth. In fact, they may signal that Dubai has reached a level of development few cities ever achieve. The question is no longer how much can be built. The question is what should be built next. To understand why construction has slowed, it's important to remember how extraordinary Dubai's growth really was. Beginning in the late 1990s, the city launched one of the most aggressive development programs in the world. Vast stretches of desert were transformed into modern urban districts. New highways connected emerging neighborhoods. Massive residential communities appeared where empty land had existed only years earlier. Landmark projects captured global attention. Dubai Marina became a dense cluster of luxury towers. Downtown Dubai rose around the Burj Khalifa. Artificial islands expanded the coastline and created entirely new real estate markets. Investors from around the world rushed in, convinced that Dubai represented the future of urban development. Construction became a defining feature of daily life. At the peak of the boom, cranes dominated the skyline and symbolized the city's ambition. Even setbacks like the 2008 financial crisis failed to stop the long-term momentum. Projects were delayed, but many eventually resumed. Expo 2020 triggered another wave of infrastructure investment and urban expansion. By the early 2020s, much of the city's master plan had already become reality. Dubai had successfully built enormous amounts of residential, commercial, and tourism infrastructure in a remarkably short time. Once a city reaches that level of development, the need for constant large-scale construction naturally begins to decline. The city wasn't slowing because it failed. It was slowing because many of its biggest goals had already been achieved. Every city passes through different stages of development. Young cities focus on building. Mature cities focus on improving. Dubai is increasingly moving into the second category. During its rapid growth phase, the city needed everything at once. It needed roads, airports, housing, office towers, hotels, utilities, and transportation systems. Building these essentials required enormous construction activity across multiple sectors. Today, many of those needs have already been met. Areas like downtown Dubai, Dubai Marina, and Business Bay have evolved into established urban centers. Transportation networks connect major districts efficiently. Residential communities offer housing options across multiple income levels. Commercial districts support a growing business environment. Because so much infrastructure already exists, the city no longer needs to expand at the same speed. That doesn't mean development has stopped. New projects continue to appear, especially in premium locations. However, developers have become more selective about where they invest and what they build. Instead of launching dozens of giant projects simultaneously, they focus on opportunities that offer clear long-term value. This is a normal transition for successful cities. Growth becomes less about expansion and more about optimization. Resources are directed toward improving quality, increasing efficiency, and enhancing existing districts. Dubai is still changing, but the transformation is becoming more strategic. The skyline may not be filling with cranes as quickly as before, yet the city continues evolving beneath the surface in ways that are less visible but equally important. Construction booms don't last forever, and economics plays a major role in determining when they slow down. During Dubai's rapid expansion years, demand for homes, offices, hotels, and retail space seemed almost endless. Developers responded by building at an extraordinary pace. Thousands of residential units entered the market. Office towers expanded business capacity. New hotels supported the city's growing tourism sector. Eventually, however, supply begins to catch up with demand. Once enough inventory exists, developers become more cautious. Building a skyscraper requires massive financial commitments and years of planning. Investors need confidence that future demand will justify those costs. Today's market environment is different from the early boom years. Dubai already possesses substantial residential and commercial capacity. Instead of asking how much can be built, developers increasingly ask whether additional projects are truly necessary. This has encouraged a more disciplined approach to development. Existing properties are often upgraded, renovated, or repositioned to attract new tenants and buyers. Developers focus on premium projects that can stand out in a competitive market. Strong property sales still occur, particularly in luxury segments, but growth no longer depends on endless construction. In many cases, maximizing the value of existing assets makes more financial sense than creating entirely new ones. This shift reflects a maturing market. Healthy cities do not require constant building activity to remain successful. Sometimes stability, efficiency, and thoughtful development produce stronger long-term results than relentless expansion. Although fewer cranes are visible across Dubai today, ambition remains deeply embedded in the city's strategy. The difference is that ambition is now expressed in new ways. Earlier growth focused heavily on physical expansion. Success was measured by new districts, larger developments, and increasingly impressive skyscrapers. Today, the focus is becoming more targeted. Dubai is investing in sectors that support long-term economic resilience. Technology, finance, logistics, tourism, artificial intelligence, and innovation are receiving increasing attention. Rather than launching massive numbers of construction projects, the city is prioritizing developments that align with broader economic objectives. This approach reflects an important realization. Global competitiveness depends on more than iconic buildings. It depends on attracting talent, supporting businesses, improving infrastructure, and creating opportunities for future industries. As a result, many investments are less visible than skyscrapers but potentially more valuable. Digital transformation initiatives, transportation upgrades, sustainability programs, and business-friendly policies all contribute to economic growth without dramatically altering the skyline. Many of the world's most successful cities reached a point where economic expansion became less dependent on construction and more dependent on productivity, innovation, and services. Dubai appears to be moving in that direction. The city is not abandoning growth. It is redefining it. Instead of asking how high the next tower can rise, leaders are increasingly focused on how strong and diversified the economy can become over the coming decades.